Okay, good afternoon, everybody. I do believe we are live here, so let's start right away with a look at the S&P 500. If you saw on Twitter, and a lot of you did, I had suggested that anyone who retweeted about the really good book from a friend of mine at SMB Capital. This is Mike Bellafiore's book called One Good Trade. Excellent book. It's really one of those books where you look at a book like this, and what I like to do when I see all these words, and there's some charts in there, but I like opening it up just to a random page and reading. And I tell you, this is kind of like Brett Steenbarger's book, most recent one. I don't have that in front of me, so I don't remember the name, but you can find something interesting on every single page. So if you don't have a copy of this book, pick one up. But what I'm going to do, as I said, was I'm going to give away a free copy to actually to two people. Here's what I'm going to do. I've asked the lovely, talented chart diva, the VIX fan out there, to take a look at this list for me and choose, and she's going to tweet the winner of that book from the list of people who've retweeted that. What I want to do is also give another copy, because I actually have two extra copies of the book, to Daytrend, Vic Shearer from Daytrend, who does a great job with his stuff, and I think those two are both people that you should be following. So Vic, I'm going to send you out a book, get me the information, and Chart Diva is going to announce who the winner of the other book is. But let's go ahead and take a look at the S&P 500 right now. We've got the SPY. This is looking at it for the week only. We're looking at 5-minute candles here for the last 5 days, and this volume, this moving average is the volume-weighted average price for the week. So what we had was basically a big gap up, as we know, on Monday, and we really kind of went sideways here. You know, that 112.50, 112.50 to 113 area was an important level that we were kind of just trading sideways the last 4 days. Obviously, the jobs report, people, hated the number, obviously, but as I tweeted, it's the reaction to the number that's more important. And initially today, we had a very positive reaction to it, whereas the market rallied right from the start, and it rallied right from the start there at daily S2. It then kind of turned sideways here a little bit, struggled with the volume-weighted average price, and broke down hard. And I think a lot of people were really looking like, well, that's the end of this. Well, our initial rally came from the area that we were looking at, which was 111.80. The secondary rally came basically from the next level where we're looking for support, which was 111 even. So the market is following the technical levels. That is, we're seeing that there is some order to this market, and that we've still got that rising 5-day moving average. So the buyers remain in control, and you just have to be very impressed with the way they were able to regain control of this market here today. We look at the daily time frame. We still have a real nice pattern here of higher highs and higher lows, and we're just stuck underneath this 113.20 level from back in mid-June. So from this mid-June level, we're consolidating a little bit under that, and that's good, because you get this type of shakeout. It only, that which doesn't kill it only makes it stronger, and it makes the case for a more powerful rally once we do get beyond that 113.20. That then we'd be looking at the next level of 115. And again, we're in an uptrend. We've got a rising 10, 20, and 50-day moving average. And for the week, we've also closed every single day above that 200-day moving average that is so widely watched as well. So, the market structure is saying that the buyers are still out there. We have bad headlines, but, in terms of economic data and that sort of thing. But here we are back to the market climbing a wall of worry. And today, when you look at the daily time frame, you see we saw some pretty heavy volume, and that's good, because that heavy volume shakeout really put the panic into the market for a little bit, and then the buyers regain control, and now anyone who kind of sold short into that, you got squeezed late in the day, or there'll be buyers next week. Anyone who kind of threw their stocks away in frustration or got stopped out, they'll be looking to buy back on for pullbacks and that sort of thing. So next week we're going to see the same levels that are important, which are this 111.80 level that we've been focused on all week, and below that at the 111 area, because it was this prior little resistance, and it's also also where we found support today. So those are our two levels on the downside that we focused on all week, and rightfully so. When we look at it, here are those two levels again. We also see that we came right down to the trend line. And as someone had pointed out, I didn't see, I don't remember who, but someone had pointed out to me as well that we had come down actually to the 50% retracement today of this recent rally. So we found support basically right at the 50% retracement of this low here on July 30th to the high we saw on Wednesday. So very impressive market action. The weekly time frame, we've still got this level right in here, and hey, maybe we're going to turn sideways a little bit in here and even pull back and create a little right shoulder on that weekly chart. Wouldn't be a horrible thing to see. Obviously, if you're bullish, you want it to go all up all at once, and you want to make money every single day. But there's still some great individual action in the individual names, such as look at Priceline, huge response to earnings this week. You look at Netflix, which was given up for dead after their earnings report. Now anyone who's sold their long position or sold short is now probably regretting that in Netflix, and Netflix is in this huge uptrend and just kind of it'd come down to the 10-week moving average, now the 20-week moving average. So there's still a lot of healthy action out there. I saw a lot of people were pointing at FMCN today. FMCN, really nice breakout here. This is a Chinese outdoor advertising company with a great weekly chart here. You see that it's breaking out. I'd seen Downtown Trader mentioning this, Zor Trades, and a few other people, but we've got a nice pattern here in this stock. I was looking at SPRD. I mean, there's just a lot of good stocks really still out there. TWTC holding up real nice and looking like it's getting ready to break out next week. This INFA, which held on to their earnings gap, still looking like it's got room to run. Crocs was a nice play today, even after the gap. Once it rallied and reclaimed that VWAP with a stop below the low of the day, and then here we had seen the late day rally as well from 1350 up to 1395. So a lot of good action in the individual names. The Nasdaq is also, obviously had recovered from what was a pretty big percentage move on an intraday basis early, and we found support right at this prior resistance level, that $46 area. So right now we're kind of, we're in this range of 46 to 47 and we're above a rising 5-day moving average. We had the same basic, same pattern in here, and when the buyers regain that volume weighted average price this afternoon, look at how these moves occur and are kind of motivated near a break of the volume weighted average price, either above or below, that is. So we've got this market that is shaking off bad news, and that's what bear markets do, is or bull markets do rather, is they shake off bad news and they continue to rally, and that's what we're seeing in here. So you've got to be impressed with the price action here. The bigger level for the Nasdaq is found up here, really at about I didn't draw that properly first, but just about $48 a share is the more important level for this for the Nasdaq. It's similar to, you would say, the 115 level for the SPY. That let's just kind of look at it on this one, where the 115 level is the next likely upward target for the SPY. For the Qs, then we're looking at about that $48 level. If it can, continue to push these higher highs and higher lows, which it looks like it should. We're getting a little bit, we've got this, people call that a rising wedge, and people will call that bearish. But the pattern of higher highs and higher lows is much more important than little named patterns such as rising wedge and that sort of thing. So you want to be aware of them as always, but this is what matters most, is the pattern of higher highs and higher lows. So next week 46 is going to be a very important level of support that the Nasdaq 100 will need to hold, and right now it's looking like it should. The Russell 2000, we've got a bigger level up at about $68 a share. That this market came down and it tested some support, and what you see in there as well is that's where the rising 10, or I'm sorry, 20, that's the blue, and the green 50-day moving average are found as well. So you want to look at that and say, you know, it's important that we found support in there. And this is really the bigger level of support, about 63.75. We break 63.75, we're really going to have to reconsider any bullish leanings we have towards the Russell 2000. But we're starting to maybe create in here the basis of a right shoulder in this market as well, where getting above 68 would indicate higher prices. So real good action. The semiconductors kind of just stalled out this week, but they didn't go lower. That's the good news. They're holding that 50-day moving average, and they're holding the level that we were looking for them to hold at $27 a share. As long as they're holding above 27 bucks a share, and you know, I think closing above 27.50 is really what's favorable, what we want to see. But if we can hold 27 next week and then break past the 28 level, we'll break past 28. We're most likely headed up towards that 29, where we've seen numerous tests of resistance in that area recently. So we get up above 28, we're probably looking at 29 real quickly. We break below 27 bucks a share though, then it becomes a lot more uncertain. The financials still pulled back a little bit in here, and as I had said, that you know, we want to give this market the benefit of the doubt as long as it remains above $14.50. Now the inverse head and shoulders pattern, you could say, is kind of ruined because we broke the neckline and then came back in. But again, forget the patterns. What's the action here? Because we've got pretty bullish action, really. We were up on bigger volume these couple days, lighter volume as it consolidated. Today we had a nice recovery after that shakeout with heavier volume once again. So so we're looking at that, and so I've just got in Chart Diva email that, or I'm sorry, put a tweet out for that, and Chart Diva is going to put out a tweet that says who the winner of the book is. I picked Day Trend as one of them, and I've looked at my email, Chart Diva, so put that out there to the public so you can tell them who that other winner is. That way it keeps it fair. And anyways, let's take a look. So these financials, in other words, they held the 1450 level. We've got the 50-day moving average down there as well, and we've still got this pattern of these higher lows and the high, and we broke the higher high this week. We didn't hold it, but we didn't cave in from it either. We didn't, you know, break out and then create a lower low. Breaking below 1450 would have been more concern, but instead we held that 1450 level. And I should extend this line back. This was what I was talking about to subscribers today. That, you know, now the next level is, you know, we have to get back above that 1480 area, and then we push up through there next week. We capture this 5-day moving average. Things could get pretty interesting to the upside, and the financials, you know, just might be the leadership group that that pushes this market higher. There's, you know, there's strength also in, you know, the oil services stocks continue to look strong. You get above that resistance, holding as support. We've got gold had a pretty impressive rally this week. I wasn't certainly expecting it, but it's up to an important area near about that 119, you know, up towards about 119. And maybe this market is now going to kind of pull back a little bit, test that those moving averages and break out. The weekly time frame, it did what we were looking for it to do, which was to come down and test this trend line and the 40-week moving average. So gold is probably just correcting more through, you know, needs to correct a little bit more through time right now after this big rally, and we've seen a price pullback that as Dr. Perlman said, got the podiatrist and the plumbers out. It also got me out. I'd been holding gold from I think it was October of 98. It was right in, or 08. I think I bought it right here. I remember I bought some bullion, and then it kind of caved in. I was thinking, man, why am I trying to invest? This is stupid. And it wasn't even a good place on the chart to buy it. But I had gotten out up here a couple weeks ago. So anyways, it got me out as well, and that's just not my style. But that is to invest in bullion. The retail holders we've been talking about for weeks, that they've been kind of leading to the downside, and now they're correcting more through time. I wouldn't be surprised to see these kind of things, the retail stocks kind of drift lower a little bit. We've got this prior support acting as resistance now, so probably more neutral on those. And it becomes, now that we're through the earnings for the second quarter, that there's going to be a lot of stocks that are holding up nicely, that have broken out, and now we can focus on those stocks like SIMG, that's consolidating nicely, and it becomes more of an environment where we're going to be able to exploit those trends of the stocks that have held up the best in here. So that's really what it seems like the game is right now. And what else did I want to talk about? I guess I wanted to end it with the financials and see what you guys wanted to talk about. So day trends wins, and Chart Diva, there was one other person, so email or tweet that one out, and then we will know, everyone will know who the winner is, and I'll contact that other winner on how to get me the information to send that book out. But let's take a look and see if there's some stocks that you guys want to take a look at. Thanks for all the retweets, by the way, from everyone, and Doug as well. Doug just got back from China. Don't Let Me Up, and I think Don't Let Me Up was the one who was asking me about BP on Wednesday, and I said it's not my type of stock to trade, but as long as it holds 39, that buyers remain in control, and BP continued nicely higher here. So anyways, Don't Let Me Up wants to take a look at JASO with in some of these solar plays, SOLR reported this week. Real nice response to the earnings. CSUN reported today and kind of got rejected. SOLF reported this week and really kind of got rejected a little bit as well. So but all these, like JASO, real nice longer term charts. I mean, this thing has been just coiling up in here, building energy really for a year and a half or so, and we have these slightly higher lows on the weekly time frame, more repeated test of the resistance. And I'm not sure when these guys are due to report out, but we had a nice, we had been riding the 10-day moving average. It pulled back, found some support near that rising 20-day moving average. And the question is, with an entry of about 655 with a stop at 637. So it looks like that 655 is, I'm not going to look at the precise numbers, but I would say that's probably above these recent highs, and a stop near 637. That's exactly how I would look at it. Yeah, so perfect. Another solar stock that these guys report next week, I know for sure, is SOL, and this one has a nice longer term weekly chart to it. I'm thinking about maybe buying some call options on this and speculating on the earnings that I believe are due out on the 12th of next week. Would be so kind to comment for Enrique on the Mexican market, EWW. In Mexico is kind of similar to our market that we have, but actually probably in a little bit better shape, I think. Let's take a look at this daily chart here. We have the higher highs and higher lows. We're holding that 10-day moving average. We're the 10's above the 20, the 20's above the 50. So we're in a nice uptrend here on the Mexican market, and this is an important area right up near about 53.5. Getting up through that 53.5 level getting up to 53.5 is where the next target would come in, and then it's going to need to clear the resistance there, and Mexico could head for the highs really. So it's looking good. It's a stock that looks it's a market that is looking good. The what is happening? My real tick is reconnecting, so looks like it has reconnected, and I don't believe that we've lost the broadcast here, so let's continue. But yeah, Mexico looks nice here. So EMN for no cigar. EMN. Let's take a look at that one. Eastman Chemical. Eastman Chemical has had a real nice run here recently, so I would think it probably needs to digest these gains a little bit because it's rallied up to where you would expect it to. So you ask yourself two questions: where does it come from? Well, it was just 52 bucks a share basically. And where'd my trend tool go? Let me get that back. I know what I have to do. So it just ran from about 52 bucks a share, and here we are up at 63, 64. So where's it come from? It's expended a lot of energy getting up here, two nice bursts higher, and where would you expect it to go before it's likely to encounter some resistance? And we're basically there, but it's really holding on to this really nicely as well, that it had that big run and it's correcting in here through time. So I think, getting up beyond 65 again with a stop below here, that you're probably headed for what's likely to be the next area where we would encounter some resistance up here at this 67 area, which was resistance, which became support, and the basis of this breakdown, which became resistance. So it looks good. It's in a nice trend, and it's above all the moving averages, and we've got that 10, 20, and 50 that are advancing. So manage risk in here with this, and with a stop below maybe even today's low, probably, since that was such an important shakeout, but maybe 62.30ish, then it looks like it is continuing higher. So it looks like we lost the audio for a moment, but I think we're back. Anyways, what that's going to do it for today anyways is we're going to end it here. It's 21 after. Thanks everybody for tuning in. I hope you have a good weekend. And Chart Diva, I don't know if she had emailed the other one, but there was another winner that you had emailed me. So if you can tweet that out, or I will after. I'll tweet the winners, the two winners. But anyways, everybody, hope you have a good weekend, and I'll talk to you again on Wednesday. Thanks.